Hey, welcome to the closing beat, everybody. Happy Monday. Hope you're having a good day here so far. This is just a quick show that we do. It's called the stock market update. It's called the closing beat, but it's really like a stock market update. We just go over the good, the bad, and the ugly for the day. I try to help you out with things that I've been looking at, things that may be happening on the day, and a quick sort of catch up on maybe what to expect going forward. We're financial advisors here at Jazz, so I hope you'll keep us in mind. jazzwealth.com. We post everything on our websites, fully transparent. You can see all of our portfolios. They are expense-free and commission-free portfolios, by the way. You can actually see their performance. You could see all of the aggressive ones, conservative ones, and everything. We also post our fee right on the website there. It's on the home page, right? It's on a couple other pages as well. We just kind of want to be that sort of advisor that you can come to and just, hey, this is what I want you to do. This is what I need help with. Manage my Roth. Help me with a rollover, whatever it may be, and not be fearful that someone's going to say, yeah, but I think you should buy something, right? Or we're going to try to sell you something. I just don't like that. I'm not a salesperson. You guys probably pick up on that. Yeah, so hope you'll keep us in mind there. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your screen. Just go guess. There's no strings attached. Take your guess there. We won't mark it to you. We won't call you. We won't do anything. You can just guess where you think the Dow is going to close next week. And if you're the closest without going over, we'll send you a $100 gift card. Our winner last week, Zachary, we're just waiting on his address, actually, and we'll send out his gift card. Not a customer, but if you are a customer, we'll actually just credit your account. Totally up to you. Well, let's get started here today because we got a lot to cover. We got the markets starting off the week a little bit mixed, right? Nothing really exciting one way or the other. Now, we touched on this last week to say, you know, the markets started off a little bit weak and then had that well-timed trade news, right? We covered that to death. And so we had that bit of a sort of a pop right into the end of the week. And so we were talking about this week, like, hey, if we pulled back a little bit, it wouldn't be that big of a deal. Today was really one of those, everyone was sitting back going, what are you going to do? Are you going to buy? Are you going to sell? Right? So all the traders are sitting back going, I don't know, what are you going to do, man? I'm not going to be the first to dive in after what just happened. And so you got a bit of a back and forth day with still plenty of news to actually cover. Well, you got the Dow higher by 39 points, really led by the financials in there, the JP Morgan's, Goldman Sachs. S&P was basically flat on the day, although it was down less than 1 point. We just call that flat. The NASDAQ lost 15 points on the day, and a lot of that had to do with people coming out of some of those riskier names that they were so excited to buy last week. So, of course, we'll cover that. Hey, last week you had the Dow higher by about 1.5%. The S&P added about 2%, and the NASDAQ added about 2.3%. Remember how that started, though. We had the manufacturing numbers. They came out a little bit light, and everybody was a little bit nervous about that. We actually covered it on the show to share with you. You know, really, manufacturing is not what it used to be. Services is where we wanted to focus, or non-manufacturing numbers, which then came out the next day and sort of showed better than expected. So that sort of put that to rest. And then, of course, the trade news, like I said, that was really well timed there to get the markets to pop, give us that catalyst to be above those highs. I'm not complaining. I'm just saying that was one of those things to make it happen there. So anyways, that was the markets last week. Today, although it doesn't show on your charts there screen, you've got the Russell 2000. Very interesting. In fact, we're just going to dive over to it. There you go. Well, let's start here, actually. So here's the S&P 500. This is everything we just talked about. We popped above those highs after a bit of a rough start to the week. And so now that we're a little extended in the short term, today you can see kind of the action was rather quiet when that's just everybody saying, I'm not sure. Do I buy more? Do I sell a little bit? Do I wait for us to pull back? Do I wait for us to go higher? What's really interesting about the S&P is we know 3,000 is sort of the next psychological resistance area. Here's the issue. If we were to just draw a line right around the 3,000 number, just to say we intersect it right around there, here's 3,000, give or take a point, you very quickly paint a picture where people could say, uh-oh, is this going to be a downtrend? Is this going to make a lower high, meaning not get as high as this time before, and actually start a downtrend here? So you're going to have some of this time where if there's no news for us to go on and we just sort of flounder around, you're going to have time for people to really start to get negative. The more people sit around, the more they go, I don't know about this market, man. I'm not too sure. And that could very well be a little resistance area there. So I'm going to leave that line on there just so we can see what happens. I'm not making predictions or anything. I'm just pointing it out. Sort of interesting there. But if I look at the Russell 2000, we got just over a 1% gain on the day. The Russell 2000 had a good day overall. Now, oil names were a big help there because you had crude oil finally break above those downtrend lines that we talked about there. And notice how exciting it was today. Notice that the people that bought all day long. See how we opened here and we closed very much near the highs of the day. If you don't know what that is and what's going on the screen right now, and you're one of our customers, go over to the dojo and search by candlesticks. I did 3 classes on candlesticks, just not really to make you think there's some magic behind it, but just to tell you, what's the story being told inside of this one candlestick today. And that is the strongest candlestick that you can actually have there. And so you really get the feeling people, they were waiting for that break, they got the break, and they bought the break. The only reason that it stopped here was because we ran out of time. There was no more time to trade. Markets are closed, right? Or at least the futures markets are closed for the moment, right? Yeah. Other than that, very strong day for oil. So going back to the Russell 2000, we talked about that having a good day today. It's of course exciting because we haven't seen that a lot, right? If you look at your 401k or any sort of other investments you have, the small cap or the Russell side of what you have, lagging. It's just been lagging there. It's been a little bit behind. If you look inside the Russell 1000, you'll find things like Transocean, symbol RIG is the ticker symbol. These are all beaten down oil names that saw good days today. It was an 8.7% gain on Transocean. So you got bottom pickers there, Helmerich and Payne. You got bottom picking there, also in the same space. You've got, like National Oil Well, I just always call it NOV. NOV is the ticker symbol, National Oil Well. Also, bottom picking here had a good 8% day. You also had retail in the Russell 2000, or Russell 1000 really. 7% gain on limited brands. Haynes, HBI is a ticker symbol there. Scary one, 6.66%. Kohl's being higher on the day. Retail was a good, we'll go over retail in a minute, but it was a good day. So Kohl's did well and the Gap did well. All of these names finally working together inside the Russell 1000, Russell 2000, and actually getting a nice little pop there. So we'll hope that that continues. We need that support and everything to continue with energy. All right, if we go over to some of the sectors here, if you're interested, we've got tech pulled back just a little bit on the day. No problem there. What was the other one? Communication services. There you go. Started the day a little bit higher. Actually finished positive on the day. These were some of your biggest week-over-week movers last week, right? So they kind of had that exciting move. You can see it there. We just count back like 6 days going into last week. Very good week-over-week movers. Same with tech, and so it's kind of understandable if they take a break here as well. The defensive areas continue to take a break. I don't need to really show you a chart of that one, actually, but let's see if you guys can guess. What are some of the areas that have been really strong that have all of a sudden taken a little break? Well, those are your REITs. You can use ICF, you can use XLRE, whatever it is you want to look at. Those took a little bit of a break. Consumer staples took a little bit of a break. That'd be like the XLP if you want to follow along. And utilities. Utilities took a break today as well. Let's just pop it back up. That'd be better. Now she's all refreshed and ready to go. There you go. So let's do that there. You got utilities pulling back. Just had a great run. Nothing wrong with it at the moment. No reason to get all nervous or excited or run away or whatever you do. Same with REITs, XLRE or FREL, whatever you want to look at. Also pulling back a little bit. Rates started moving a little bit higher there. So naturally, people saying, hey, it's been a good run. I see rates going higher. I'll take a little profit off the table. And that's what's going on there. The gold miners, the gold area also retreating a little bit. You got GDX. Back below the 50-day moving average, those are your gold miners. The price of gold, I'll use GLD just to show it today. Also pulling back there. Very, very great move to the upside. Totally normal to see it pull back. Silver, I don't know if you'd be too excited about that one, right? That was a pretty strong move to the upside and a very strong move to the downside. Not typically something you like to see, but if you're in that space, you had more than enough time to decide what you were going to do, take a little profit or add to your position or whatever you plan to do there. We already talked about oil, so I'll move that off my list here. I'll keep following on with it. We're going to stick with it here, but crude oil breaking above there, and a lot of the names today that were strong were in that space. That helped other ETFs, well, some of the sector ETFs, like your oil explorers. You got XOP here coming up off the bottom there. It's a little bottom picking by people thinking maybe this time is the bottom in oil. OIH, oil service companies, they also popped up there. But these are still very weak areas of the market. So although today was exciting, Dustin, is it time to buy? These are very, very weak areas of the market. I'm of the belief that you let this one go, let everybody get excited, and wait for it to pull back and see if you want to participate then. I don't think there's any need to feel like you got to dive in on this thing and catch a bottom. All right, bonds moved lower today, which means rates moved higher. The TLT is what you see on the screen. We gave you the stats on that one. This is moving exactly as it's supposed to, given the time period that we gave you and all the stats there. So So far, no surprise there, right? It's totally expected how this thing is moving. Now, because rates had moved a little bit higher, regional banks, they also got a chance to enjoy a little bit of a profit. Remember, they're more affected by the rates than most of the bigger banks. So KRE is a regional ETF, if you want to look at that sort of subsector there. Had a great day, about 3.5% to the upside there. And let me just show, let's actually show rates. Here's your 30-year bond. Remember, as prices pull back, rates are going up. So slight little uptick there in rates. And you also have your short term. Here's your 10-year if you want to take a look directly at the 10-year notes, also pulling back there. So not a whole big deal there, and actually expected and welcome. Retail. XRT is a symbol I'll look at there, breaking through this sort of downtrend little resistance. Again, very weak area. I'm not saying this is the start of something new and exciting. It's just an interesting rotation into this sector that people are willing to kind of do some bottom picking there in general, so not bad. Last week we talked about natural gas being your biggest week-over-week commodity mover. Today that continued, another 4% in natural gas. Last week, count back about 6 days, you can see why it was the biggest move that it's had in a while there. So likely grabbing some attention over the weekend and kind of grabbing more money. You got money coming out of the solar category there. TAN is the sector you can, I'm sorry, the ETF you can look at there. Breaking below the 50-day moving average, this is the best performing group in the S&P 500. So you got the index, you got the sectors, the 11 sectors there. If you want to dive down even further and go into the industry groups, this is your best performer, still with gains of over 60% on the year. Aerospace and defense, by the way, is the second best if someone was about to ask that. Still doing well, although it pulled back today. PPA is one way to look at the aerospace and defense category, just an ETF. I'm not recommending any of these. It's just ones that come to mind when I take a look there. If we go into the S&P 500, it was kind of an interesting day today. It wasn't, and it explains why we're sort of flat, right? You have a day where the S&P didn't really gain much, and it didn't really lose much. It was just kind of flat trading on the day. And if you look a little bit deeper, you have 25% of the S&P 500 was down 1% or more. You got 42% of the S&P 500 was up 1% or more. So it was one of those days where it was like, if you're down, you were down sort of big. If you were up sort of big. So there was no real middle ground where there was a lot of stocks that said, we're not doing anything. We're just sort of taking the Monday off here, going to kind of be flat. It wasn't like that. It was choose a direction, and that was the way the S&P sort of pulled at itself throughout the day. So that's that one. Let's go over to, we don't need to make a big deal out of the retail stocks here. Just some of the ones we've been following. You notice how I do this. I just follow along with a stock for a few days, and then I'll move on to something else. I like to try to give you a heads up on action and then watch the action play out for better or worse and then move on to something else. You got PVH. We talked about this last week. CEO buying about $10 or $12 million in stock. That's continuing today. Very strong day. Tapestry is a popular one. I keep seeing you guys ask questions on that. Also a strong day, 2.5%. Same thing. If this took a break from here, it's totally cool, right? Kohl's, interesting little bottom picking going on here. I don't know. I find that interesting that people are saying in a big way, let's go put some money in retail, and now's the time to go ahead and do that. That's an interesting time to do that, not considering we don't necessarily know the official end of the trade deal, although Treasury Secretary Steve Mnuchin was out today saying that we've essentially agreed on how we're going to proceed. So that's good news. If we look through some of the other names here, you got PayPal. That's a noticeable drop to the downside. Notice it's down 4%. So all the gainers I've been showing you, up 2, 3, 4, 5, 8%. All the losers now will go through. They had pretty decent down days here. So PayPal was lower. Citigroup actually raised their price target to 137. Just poor timing. Poor guy. He put out his recommendation. He's like, I did have a target of 124, going to 137. Stock falls 4%. That's a tough one there. But actually, all of the names in this payment processing sort of space just had a rough day. These are known for being bigger sort of growth stocks or potentially growth stocks. Square was down on the day. Visa was down on the day, pulling back off those highs there. MasterCard, same thing. Just down days here overall for the payment processors. I didn't look too deep into it, but that's what you have there. All right, 60% of the S&P 500 is above the 50-day moving average. We were at 56%, so a small uptick there. I mean, it's hard not to complain there. It was a flat day for the S&P 500, and we still were able to get some stocks growing up above those highs there. REITs, utilities, and consumer staples still lead the way, although that grasp on the dominant area is starting to sort of weaken little by little. So I'll keep you posted on that as we go. There were 36 new 52-week highs today, 8 sectors represented, though it wasn't as thick as it was the other day. So the other day we said there were 8 sectors represented, and it was sort of exciting. It was a good thing. What we have now is we have 8 sectors represented, but 3 of those sectors, basic materials, utilities, and such, they only had one name in their 52-week highs today. So it's technically really like there was only 5 sectors represented. You kind of, asterisk goes next to today's report on that one. Also, another asterisk, 14 of the 36 names in the 52-week highs today actually turned around and went negative. Not by a little bit. They actually felt pretty good there. MasterCard, Twitter, Costco, all good examples of that one, if you care to take a look at that. So although there were 36 new 52-week highs, they were suspect, right? And we showed MasterCard. Can I show Costco? Let's show Costco. So Costco lost about 1.5%. No big deal there. Just a little extended in the short term. Got some profit taking there. So even though it did poke to 52-week highs, didn't finish up there. Not a good sign when that many of them finish lower after being sort of hitting new moments to celebrate, 52-week highs, right? Western Digital, that's a breakout we've been following there. It was a little bit higher today. You can see it struggling a little bit. Same thing I said on Friday. If it pulls back here, that's okay. Just careful. Don't chase something like this. It broke out. It had a good run. You can see the buyers are starting to dry up a little bit. And so if it pulls back, you're totally fine with that. 3 new 52-week lows on the day, and they were all biotech related. Oops. You got the same ones that we've been talking about. ILMN. I dislike this stock a lot. It's just not my thing. Algin, also very weak. It's been hovering near those 52-week lows for a while. And Regeneron, REGN is a ticker symbol, also breaking to new lows. That was pretty much it on that one. We gave you some stats last week talking about Dollar General. Dollar General is supposed to be pulling back an average of 2.36% over the next 5 days. Today's day 1. It was down about 0.5%. However, it doesn't count, right? Someone will catch it. You got to be honest to people on YouTube or they'll pick up on you real quick. See, what happened today is it gapped higher. So for me to say it was down 0.5% is not technically fair. We're going to make those stats live up to their sort of end of the deal there. I'm not going to just say that was good enough. So we got a ways to go. Basically, the stock was down. I won't actually be able to see it there, will I? Let's go like this. So if we account for the gap in there, the stock really only lost about that was a small gap, actually. All right, so it's about 0.4% to the downside. No problem. Zoom back out there. Anyways, the stats on that was 69.1% of the time after being extended as much as it was. The next 5 days produced a loss of 2.36%. And so today would be day 1. We'll keep you posted on that one there. What else do I have for you? Chipotle. CMG is the ticker symbol there. It did poke to new 52-week highs today. It was upgraded at Wedbush. They gave it a $9.80 as a price target. Stock's currently trading at $8.39. The average price target on the street is $7.70. The analyst that gave it the $9.80 price target is 55% accurate. He's got an average of a 4% gain after 1 year's worth of holding his recommendations. The best analyst, which has a 72% success rate, has an average 17% gain. His name is Jake Bartlett from SunTrust. He's got a $900 price target on it. So it gives you an idea that the guys that are on the top end of the sort of performance, they still think the stock is higher, even though it finished, well, it was flat basically today. So a lot of bullish people on this one. You've got a lot of analysts also adjusting their price targets because they're sort of floating down there. They've now surpassed their price targets. Time for them to give some new research and stuff. So I would expect that to come out here as we near the next earnings cycle. But nonetheless, that's his price target there. He's got a $9.80 price target. What do you guys think? Almost $1,000 for Chipotle? It's worth it, man. It's good food. Anyways, Alibaba. Tomorrow is actually the day that Jack Ma officially steps down. He's done. If you didn't know that, that's the news there. The stock is stuck right at resistance. There's going to be a period of time there where people were trying to figure out what's good with this company here, but it's all good. And then finally, we've got just a couple more things here. Consumer credit was the econ number that came out today. Way higher than expected. Consumer credit, new credit, $23.3 billion. We were expecting 18.2, and you go, well, that's, I get it. It's a few $billion difference, but last month it was 13.8. Y'all are out there spending some money. Remember, if you're thinking, hey, are we nearing a recession? Should you be taking on new credit? is now not the time to be hoarding a little bit of cash, right? Maybe investing it conservatively or putting in savings or whatever and just wait for those discounts? I don't know, man. Apparently, a lot of people are out there buying. Now, the question is, on the revolving credit side, are they doing it because they have to? Are we starting to see weakness in there where people are saying, I'm not using the credit card because I want to go on a cruise. I'm using the credit card because I don't have the dough, right? If that's the case, that'll come to light here pretty quickly, and that could be one of those indicators that sort of gives us the hint. What do we got? Other than that, Bitcoin still stuck around the 10,000 number. It's trying so hard to get something going and get back into the news there. The SEC chairman was on TV today talking about a bunch of things, but he was talking about Bitcoin ETFs. They're being stubborn. They have their demands. Somebody's going to figure it out. There is one ETF actually that's sort of trying to get one around the SEC and not have to register with them because they're not actually going to trade it in a certain way. It's a whole geeky thing. And it can work. I mean, it can actually, there's no reason the SEC could stop them on that one because they're following the rules of the SEC and they don't have to register. Maybe another video. Wendy's, a little bit lower on the day today. They cut their forecast for the rest of the year because they're going to focus on rolling out breakfast next year to the world. Y'all, would you buy Wendy's? Would you buy breakfast from Wendy's? I'm not even sure what I was supposed to be expecting. Like, I'm no stranger to Wendy's, but I'm not sure what I'm supposed to buy there. So interesting. Apparently they're already testing it. Not in my area. Well, I wouldn't know. I haven't been to Wendy's in a while, but they're trying it. Chick-fil-A, yeah, that company. You want to talk about a prime time for a company to go public. They are not only in the public's view, really, really doing the right thing right now, but that guy, they don't want to do it. You would almost be nervous if they did go public because they swear up and down they're never going to do it. People take on more consumer debt when times are bad, not when times are good. Yep. And what's funny, Mary, is the personal consumer and the corporation, they're complete opposites of each other. The consumers, we take on more debt when we need the debt. We have to have it to survive. Whereas corporations, they take on debt when they don't need the debt. They take on the debt when it's available to them, right? When it's easy money, they take it, right? They make it work for them. And if we would treat it the same way, what a difference that would make if we only took on debt when it was available. Like right now, costs next to nothing to get a car loan. Why on earth would you go pay cash for a car, especially if it's a more expensive car? Why not just take the loan, especially if you have the cash? You just pay it off, right? So when it makes sense to take on debt, I'm a big fan of that this is one of these unique times in a whole generation where you could potentially make sense of certain types of debt. Whereas, back in the 90s and early 2000s, there's a great argument to say, pay off your house as fast as possible, pay off that car as fast as possible, don't overextend yourself and all that. Not quite the same these days. People are shorting gold and SLV. Well, that's an understatement, yeah. AT&T in the news today. Yeah, it actually started off kind of strong on the day and then sort of faded away. Quick story on how that worked. There's a activist investor, has a big position. He's like, you know what? We're taking over. We want AT&T to stop buying other companies. We want you to sell off your garbage companies, focus on what you do but well, cut costs, and make as big a profit as possible. If you do that, we think your shares could be at $60 a share, I believe in less than a year. That was like a year target. So the stock was higher. Everybody was like, yeah, all right, activist investor. Even Trump was like, yeah, go get them, man. That's great. Although there was some political bias there, right? Anyways, so the stock started off higher and the CEO came out and he's like, we will look at the sort of what they plan on doing, but we're already doing a lot of that already. And then people thought, oh, crap, if you're already doing that and the stock price isn't headed towards 60, which it's been doing well, but if it's not headed towards 60, then it doesn't matter what the activist investor does. So they sort of took the wind out of his sails there at the expense of the stock price today. That's the short story. I could talk about that one for a while. Phew. What's up with CrowdStrike? Didn't look at it today. Can't say I honestly looked at it. These new IPOs, I do not usually focus on until they're 200 days old or older. So we're not there yet on CrowdStrike. Yeah, you're right. Did come out with their earnings today. I don't know much about this company. I probably shouldn't comment on it. Let me do some research on it. Actually, I don't really look at them anyways till after 200 days, but I have a feeling it's kind of what like Beyond Meats is and stuff. It was probably really exciting and starting to fade away. Thanks, Mary. What? So what? You want to buy Shopify's 365 short-term calls with Interactive Brokers margin. Can you explain my risk? I watched a video about margin. If you're buying calls, then there's nothing there. You're just paying for what you're paying for. So if you're going to buy those calls, you're just going to pay the cash. If you're going to use a margin account to do that, yeah, you do get some relief there. But at the end of the day, you're buying. Where is it at? Careful on these calls, by the way. You got to have an awfully bullish position, because a lot of people think, I'm going to buy an option. I'm limiting my risk there. You're going to buy 365 calls. You would statistically be better off buying shares, by the way. You have a less chance of making money with those 365 calls, no matter where you're at, however fast you think it's working. You have less chance of making a profit with buying those calls than you do if you just buy shares. I get it. The shares aren't cheap, but statistically, you have a better advantage there. And if you must buy that stock in the short term, why not go with what gives you the better advantage, even at the expense of capital? It sounds like it's a really short-term trade. Thoughts on the semiconductors? I'm like, I might be getting left behind on this one, but I'm the one that keeps saying, you know what? Doesn't it sort of seem like it's waiting for this trend line to catch up? I might be wrong. I'm going to pop it up here in just a second to show you. I might be wrong because I see it's popped a little bit there, but I just kind of feel like, why is it going to just blast off? Give me the good reason. Give me some help here to tell me why someone should chase this most recent pop. So here's the trend line I've been drawing. I've been talking about this one. I guess we could extend it a little bit, make it play catch up. I just kind of feel like people in the bigger picture are waiting for that. And so if it flounders around for a while and there's some good days and bad days, that typically gets people to go, whoops, I guess we're not waiting for the trend line, and they dive in. I think this is where the patient traders and investors are saying, I'm in no hurry. I'll wait. Let's let it pull back. Worst case, it flounders around and I got to buy it somewhere when the trend line catches up. But that's pretty much it. I don't, it's just because I'm looking at it every day. I'm not like saying I'm a short-term guy or anything like that, but I just like looking at that sort of thing. Yeah, I don't, any thoughts on Upwork? I don't really look at those either. Work. There we go. Doesn't look good, just from a technical perspective there. This one just would be starting to come up on my radar, but I don't. These are so new. I wish them well, though. I like the company. I like using them, but I don't know. I don't really have enough to offer there. It seems like people are trying to bottom pick there from a technical perspective, but it's so new. When I say like oil breaking out above that trend line or whatever, that's because you have traders that's their job, is to do that. And they are trained on how that works. They only trade oil. They know the history. They look back and go, that's a repeatable pattern that I can use. Well, with some of these newer companies, you don't know who's actually following along. You still have the excitement of people that believe in the company. You have the family. You have everybody invested in it and everything. So it makes it a little bit tougher, and so a lot of the times you can't look at the technical signals, and because of that, being sort of my starting point, I don't look at them there. Yeah. Okay, so hopefully that helps. I'm sorry it's not like amazing, but any thoughts on Uber and Lyft? Let's take a look. You got Uber and Lyft both sitting at lows there. It's not looking good. This is, again, another one where I would make the comment, do you need to pick the bottom? Like if you're thinking about buying the stock, do you need to get the best possible price? Would it not be a little bit better if you watched it bounce, let some of the positive momentum build in the media and see if something even builds positive there, and then say, okay, I'll wait till it relaxes and catch that next ride there. Miss out on the first 10, 15%. That's kind of how I feel about that one. Yeah. All right, a couple more and then I'll wrap it up here. If Tesla wins the lap time race in Germany against Porsche, will that move the stock? It might be a temporary, exciting. I saw what happened with Porsche the other day. A beautiful car, but it might temporarily win a little something. By the way, did you see the, was it Sea-Doo? Who was the guy that was on TV today? Said we can't actually find a way to make a profit on electric motorcycles, right? Interesting. But no, it wouldn't. I mean, it doesn't mean anything fundamentally for the stock, Harry. Yep. What time frame are the charts set to? Always daily, unless I change them. Those are all daily charts. Yep. Yep. Could Uber and Lyft be treated like pairs for Home Depot and Lowe's? That's a great example. Yeah, very good example. Yeah. Same sort of notional breakdown, though. A pairs trade is a pairs trade. Doesn't matter what the price is. You got to break down the notional value and trade it that way. Yep. All right, I will wrap it up there just because I try to keep these not too long for you guys. Ulta, we've talked about Ulta now. So remember when they had their earnings, they sacrificed the rest of the year or the next quarter. So in Ulta, the fact that it's moving lower, the CEO basically told you exactly what they were going to do. So we've highlighted that. I think last week we talked about that again, that what's the rush to go buy it if you know the company's already sacrificing next quarter? There's no rush, meaning all the big dominant investors, other than telling their bosses, hey, it's an extended stock, it's sold off, it's a discount, anybody's boss is going to say, yeah, but they're not doing anything good till next quarter. Or we don't even know if it'll be next quarter. They're just sacrificing that one. So careful on Ulta. There's a difference between people overreacting and when a company says, yeah, that's just how it is. We're throwing in the kitchen sink to get you guys to just, let's take the hit now. They'll have something good on the horizon there. It's like Tapestry, limited brands, things like that. What's the rush? So for that reason, there is no good reason for people to get all excited about Ulta, unless you like makeup. All right, I'll wrap it up there. Enjoy the rest of your day. Yeah, that's all I got for you. Thanks for watching. I appreciate it. If you get a chance, hit the thumbs up button or subscribe button or something. And thank you. We'll talk to you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.